let's say Bitcoin doubled, got to 200. And Ethereum just got to where Bitcoin is right now. We're talking about a $15,000 Ethereum. That means a 6-time gain in less than a year. And I think we're going to get between 8 and 12. That was my prediction when Ethereum was way down at 900 2 years ago. I thought we'd be at 12 to 15,000 sometime this year.
Ethereum is showing serious momentum right now. In May 2025, the world's second largest cryptocurrency isn't just riding Bitcoin's wave, it's making its own moves with powerful upgrades, institutional attention, and potentially game-changing ETF news. If you've been watching from the sidelines, this might be the time to tune in. Just days ago, Ethereum implemented the Pectra upgrade, which included EIP 7702, a technical improvement that boosts scalability, lowers gas fees, and enhances overall network security. That matters a lot because Ethereum is still the backbone of decentralized finance. These upgrades make it faster, cheaper, and safer to build on Ethereum. More developers are coming in, more projects are launching, and the network is becoming even more attractive to users and institutions alike. But what's really got the market watching is the potential approval of Ethereum spot ETFs. The SEC is expected to make a major decision in the coming weeks. If they approve it, even one product, it could unlock billions in institutional capital. Think pension funds, hedge funds, and massive wealth managers finally getting exposure to ETH, all without dealing with wallets or exchanges. Analysts at Standard Chartered estimate Ethereum ETFs could bring in up to $45 billion in inflows over the next few years. That's not hype. That's real demand waiting on regulatory green lights, and the price action reflects the anticipation.
That Pectra upgrade did lower the network fees, which a lot of people were complaining about. I don't know if you guys remember that, but I used to tell people all the time is that back to the original point is that technology takes time to move ahead. At first, it's expensive, it's inefficient, it's buggy, and then over time, those problems will get fixed. It used to be a lot of gas to send Ethereum, especially back in the NFT days. But now we're starting to see these new upgrades are making it cheaper and cheaper and cheaper and more appealing compared to the $7. It used to be $7 to send something. Now it's like 84 cents to move Ethereum around. There's more than likely going to be some consolidation between 2,400 and 2,700 before another breakout. Could even be a pullback down to between 21 and 2,300. But that doesn't mean anything. Remember, markets move in impulses and corrections. That's normal, and that's what we expect.
Ethereum is currently trading around $2,500, but bullish sentiment is building. If ETFs are approved and momentum continues, many analysts expect ETH to climb toward $5,000 by late 2025, with some outlier predictions even calling for $10,000 or more if conditions stay favorable. It's not just about speculation anymore. It's about network usage, institutional demand, and Ethereum's central role in the crypto economy. Another big catalyst is staking. Ethereum moved to proof of stake in 2022, but now we're seeing the impact really take shape. With staking, ETH holders can lock up their coins and earn rewards for helping validate transactions. This has already created a strong incentive for long-term holding. But once staking becomes available through regulated ETF products, it adds another layer of attractiveness for big money investors. They can earn passive yield while gaining exposure to ETH, all through a familiar investment vehicle. That's a huge unlock. Ethereum is also heavily influencing what's happening in the broader altcoin market. As ETH rises, it tends to lift other Layer 1 S and DeFi tokens with it. Think of Ethereum as the center of gravity for altcoins. When ETH is strong, people start rotating into other promising coins. This is how altcoin seasons often start, and it looks like we might be in the early stages of one now.
I want to talk about the 3 reasons why Ethereum is surging right now. Ethereum's up nearly almost 100% since last year at the bottoms. Now remember, Ethereum, this is what people don't realize. They see Solana. I'm not against Solana. I think that should actually be part of everybody's portfolio. Not against Solana. But I do believe that Ethereum is far superior. Solana is really for meme coins, younger developers. But you remember the people that actually work at these corporations are a lot older. They're older developers. They're going to stick to Ethereum. Ethereum right now holds 51% of the total stablecoin supply. Big names like Stripe, Meta, and a lot of other major corporations are working on Ethereum. Right? Ethereum is building up layer 2. Platforms like Base, WonderFi are bringing institutions and brokers into Ethereum's layer 2 space, all of which settle in Ethereum. Now, for people who don't understand what layer 2, the concept of layer 2 is that the internet, the way that we are able to, you guys are able to see me right now on your screen, the internet is 7 layers. It goes from the network, it goes from your computer all the way up to delivery, presentation. And the internet didn't start out 7 layers. It started out with 1 layer, the networking, how the information just moves around. And then it built up into some kind of code to transmit that information that's efficient. That's HTML. And then it moved up into, we have to display this information on the screen. That's web browsers. And then it got to the point, DNS servers, which translate, every website is a number, but nobody remembers numbers. So in order for it to be usable and everybody to be able to use it easily, you had to create some kind of system to where when people typed in youtube.com, it would look up the number and you would actually go to the number of the server, but on your screen you see www.youtube.com. You're actually at a server address, which is a number. But people couldn't remember all these numbers, so they come up with a DNS. See, these things took 20 years to build up so that now you can put youtube.com in there and it just comes on the screen. You don't have to configure none. You don't have to set up anything. You don't have to do any of that stuff because the layers that were built between you and me were built behind the scenes. So if you go back to the 80s, to do anything remotely like this, you would have had to have the technical skills of a PhD level computer scientist. You'd have had to configure your own monitor. You'd have to download the code. You'd have to make sure you understood the codes to put in to communicate back. But over time, now it's easy. That's layers. So Ethereum is, every other blockchain is moving up in these layers. So eventually, all this stuff will be in the background. We won't even know what's happening.
Beyond the tech and market mechanics, Ethereum is also benefiting from an improved macro and regulatory environment, with U.S. states like New Hampshire and Illinois expanding their digital asset frameworks and global powers easing their stances on blockchain. The entire space is gaining legitimacy. If the SEC moves forward with ETF approvals and staking support, it signals that Ethereum isn't a risky experiment anymore. It's becoming a mainstream financial asset. There's also growing conversation around Ethereum being included in national digital reserves. While nothing is official yet, just the idea of ETH being treated like digital gold or a strategic store of value by governments shows how far the project has come. We're not talking about what if anymore. We're watching real adoption unfold.
A lot of people took out short positions on Ethereum after that because they thought it was over, but it's not over. And the good thing I like is Ethereum's use case is expanding past just being digital money. It never was meant to be that. Ethereum was never meant to be digital. It was meant to be oil to power a system. It's becoming the backbone for stablecoins, security, smart contracts, what it was always meant to be. Institutional interest from BlackRock and Franklin Templeton in tokenizing, and this is a big thing that Ethereum is going to do too in the future, is tokenizing real-world assets. The only way you'll be able to see technology early is if you learn to understand trends, cycles, and patterns, especially when it comes to technology. Now, the point I'm making is with Ethereum specifically, people missed the boat on Ethereum because they looked at this technology, came out in 2015. It was early. Remember, it was before Solana and all these other coins. So Ethereum had to discover all these new things about smart contracts, development on the blockchain, how to make their systems more efficient, with all that stuff working on top of that blockchain. They had to do this early. Solana had the benefit of looking at Ethereum and then making their blockchain better than Ethereum's. And every other blockchain that you could program on smart contracts, whatever, had the advantage of seeing what Ethereum did and changing it. That does not mean that Ethereum is done.